How to save over $100,000 on your next jumbo mortgage. Let's talk about it. Okay, so I'm gonna share a few tips to help save you tons of interest over the lifetime of the mortgage if you just kept a few things in mind. But before we dive into that, let me share a little bit about what a jumbo mortgage is. So you're financing a mortgage above $647,200. That's considered a jumbo finance. Everything below is gonna be conforming, also known as conventional. These are backed by Freddie Mac and Fannie Mae. The restrictions and requirements are different. When you finance through jumbo financing, there's going to be a little more requirements, a little more paperwork involved to get qualified. The loan sizes, the 647.2, is reviewed every year. So for this year, 2022, our loan size is at 647.2. It's been gradually increasing over the last few years as these sales prices continue to increase. We may even see that happen again in the following year coming up. So when you're financing through conventional, or actually through jumbo, what are the things to keep in mind to save you tons of interest? Well, really, it boils down to two main factors: credit and DTI, your income to debt ratio. So the credit scores, the higher the score, the better the rate. You really want to be at least above 700 to get some really quality low mortgage rates. It's not that if you're below that you won't get a good rate, but the higher the score, the better the overall picture, the less risk for that private investor, which means you're getting a better rate. The other piece that you want to keep in mind is knowing your income to debt ratio. That's the overall expenses on the credit report, like credit cards, auto loans, student loans, the future mortgage payment, and then dividing that by the income that you're currently receiving. If that ratio comes back below 43%, then that's a good start. You're definitely in the jumbo financing that's going to get you the better mortgage rates. If you're above that, then most likely we're looking at, again, stretching that layer of risk, which means that that could impact, and most likely will impact, your mortgage rate anywhere from a half to a full point. So that over the lifetime of the mortgage is tons of interest, and that's how to really know if you're getting the best rate and saving tons of interest over the lifetime of the mortgage. So to figure out what that looks like, have a great conversation with a mortgage loan officer who can guide you through and strategically plan on how to make this happen based on today's overall guidelines. Guys, I hope that helps. If this was some good content for you, please like the page, share, subscribe. Look forward to seeing you in our next video. Bye.